Crude oil nosediving today, down as much as 33% at one point. Joining us now to discuss is Phillip Streible, Blue Line Futures Chief Market Strategist, just looking at the numbers there. For what's happening in the oil market, this is coming off of what happened on Friday between the Russians and the Saudis. Is this a one-day event? Are we ripping off the Band-Aid and this is our new low, or do we have more to go?
No, this is going to last for a little while, but however, if you start to look at the next quarter and the quarters out, once the recovery occurs, once we get past coronavirus, you'll start to see the supply-demand balance reconnect itself, and oil prices should head up for here. We still have year-end targets that are north of $40, and I think that's completely achievable. I really think that this was just that initial reaction, that initial supply shock. You get a lot of people that are quite upset about it. Even if you're an investor in the IPO in Saudi Aramco, you're below that IPO price. You're wondering what's going on here. You know, you're a Saudi investor. You're loyal to the Saudi government. And, you know, you look at some of these other stocks in the U.S., a lot of the shale producers, a lot of the other guys like Noble Energy, you know, they're all under quite a bit of pressure. Occidental, anybody who's heavily leveraged on debt is going to be under some serious problems right now. They're definitely going to have to refinance, restructure right at the moment.
And then just thinking about where oil fits into the bigger macro picture right now, because certainly we knew with how coronavirus was unfolding, there would be new dominoes to fall. I don't know if anyone thought that Saudi Arabia would come in like this, but you know where oil fits into this broader story right now. Is this a surprise? Just, you know, you're someone who watches the market closely. Is this a surprise to how things would unfold in the oil markets in a period of kind of global economic distress?
See, I thought with the coronavirus, I thought we were actually starting to get past it with Friday's close being so strong towards the end of the day. I thought we would have had a more normalized trading session today. Still quite a bit of volatility. I really think that it was this fight between OPEC and Saudi Arabia, or Saudi Arabia and really Russia, that really, caused the volatility in the U.S. equities. This was Saudi Arabia. They're not getting along with what they want to do, and basically they're throwing, it's like an infant throwing all the toys out of the cradle right now. So they're throwing all the supply of oil out there. Markets are going to come down. They'll probably come back to the table, but I really think this jeopardizes OPEC, as a long-term structure holding together. I think that this is really going to jeopardize it because Saudi Arabia is being quite selfish at the moment if you are really loyal to them and part of OPEC.
Jared Blicker here. I want to ask about the credit situation of some of these companies. You take a look at Apache today, for instance, down nearly 50%. A lot of these companies, they want to return shareholder capital and maintain their dividend, but got to be thinking about a wave of defaults at this point. How serious could this be for the industry, and could it lead to greater credit contagion for the market writ large?
We definitely believe so. And those are some of the, the different investments out there. You want to look at some of the banks and some of the other guys out there that hold a lot of these, the credit and the possibility for defaults. There should be a consolidation within the industry now. There'll also be a number of layoffs. It's quite unfortunate. And this is really the U.S. shale. We're just a victim of this fight between Russia and Saudi Arabia. Russia's been so upset with us and upset that, we're continuing to produce record amounts of oil where they need to curb back. They need to step back production. So we're just one of the dominoes that fell from here. And I really do think it's going to have a ripple effect. So you really want to look at some of those stronger balance sheets when it comes to oil producers.
Phillip, it's Heidi here. So you say this isn't a one-day situation. So taking a look at the price war between Saudi Arabia and Russia, it seems as if both countries, at least in the near term, can navigate this $30 per barrel environment. But who's going to fold first? Who has more to lose here between Saudi Arabia and Russia, in your opinion?
Well, Saudi Arabia definitely does because of the fact that their GDP is like 60% tied into energies, where if you look at Russia, they're more of a diversified country. It's only about 30%. They've got a lot of, gas and other products out there within the energy space that diversifies them a little bit better. I think that, ultimately you'll see Saudi Arabia will come back to the table, try and restabilize the markets. Once they fell apart, once this all happened, last night we saw all the stock indices in the Middle East collapse, and they don't want to be the one to be the catalyst to drive this market to this next level lower. So I think they'll have some sensibility in the next few days, try and stabilize it. I don't think we're going back to 45 or 50, but I do think we're going to creep back up to 40.
Phillip Streible, Blue Line Futures Chief Market Strategist, thanks so much.
Thanks for having me.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.